What's good, everybody? Welcome to the closing beat. Happy Monday. Well, as good as you can be happy on a Monday. Hope you're having a good day so far. You haven't taken a look too closely at the markets, but if you have, don't worry. We'll cover that for you today. We're financial advisors here with Jazz Wealth. We cover the stock market. We will talk to you the good, the bad, the ugly. We'll make sure we cover everything for you. This is really more just a quick overview of how the day went for the overall stock market. Sort of a big week for the markets, where we have the Fed coming out on Wednesday, and then we have the potential of a partial government shutdown on Friday. Remember, Trump said, give me the funding for the wall or I'll shut this government down. And so we'll see. I mean, just know there's a lot of drama going on this week. My prediction before we even get started is that the markets will actually start to recover by Wednesday, and we'll see a little bit of a bounce going into the end of the week. Just a fun little game, you know. Don't make any decisions based on that. I'm not really allowed to tell you what to do here as a financial advisor. But I just think it'd be kind of interesting to see if it does recover by the end of the week. I wouldn't expect a whole lot in terms of huge rallies tomorrow unless there's some news that comes out we don't know about. Everybody's going to wait for the Fed. I already spoke about the Fed last week, talking about how they will raise rates, in my opinion. They will raise rates on Wednesday, and then they'll give commentary going forward that says, now we're going to hold off. Something to the effect of, we'll sit back, we're going to wait, see how the markets handle themselves, blah, blah, blah. But they're going to raise rates on Wednesday. So we'll see. We'll see how it goes. So anyways, here's the stock market for the day. You ready for this? Are you ready for this? You got the Dow down 500, a lot of that coming towards the latter part of the day. That's 2%. That's a new low. You got the S&P 500 down 53, we'll call it 54 points. That's 2%. That's a new low. You got the Nasdaq 100 going negative on the year, joining all the rest of them, down 156. That's 2 1/3% down on the day. That's a new low. You got the Russell 2000 weak on the day, also a new low. So you got a lot of real pressure to the downside there, and we'll try to cover it for you here as we go. A couple things you should know. You've got 27% of the S&P 500 now in bear market territory, meaning down 20% or more. So 137 stocks out of the S&P 500, or 27%, 27.4, something like that, are down 20% or more. Some of you will view that as a discount, and you will go, Dustin, what stocks are they? Which ones are down 30%? Which ones are down more? And some of you will get excited by that. Others of you will go crazy thinking that you're investing at the wrong time and maybe you should do something else. Look, it's all about your time horizon. I want every one of you guys, look, I've got the towels. I see the towel questions. If you need a towel and you're one of our customers, I'm happy to send you one of the towels. It's sort of a joke. I haven't hung any up in the new space here yet. But here's the deal. If you're a long-term investor and you're not trading this market, meaning you're investing for something 5 years, 10 years, retirement, whatever it may be. If you're a long-term investor, I want you to find somebody older than you who also invests, and I want you to ask them if they're scared. I want you to ask them if it will be okay. I'm 36. If you happen to need to ask me and you're younger and you want to ask me, that's fine. Go speak with someone who's been through this before, and every one of them is going to say, it turns out to be a gift in the end. It's no fun going through it. Now, hopefully it's not one of those people that cashed out their 401k right at the lows of the 2008 crisis there, but just go speak with someone who's been through it before, because this will not be the last time you experience markets like this. I get it that it's a bit crazy there, but it's going to get crazier. I mean, there's just so much going on. You got the government, when the Fed is done on Wednesday afternoon, it's about 2 o'clock in the afternoon Eastern time. Once we hear from them and hear the comments, that'll be the topic of conversation for the rest of the day. And then instantly we're going to switch over to what happens with the government. Are they going to shut down partially on Friday? And that's not even really made the majority of the headlines yet. So just know that. Also, before we continue, if you're one of our customers, I sent out a note. I ran through some stats for the market. Hey, what happens if the stock market, if the S&P 500 finishes down 10% in the fourth quarter? In the hyper short term, meaning first quarter of 2019, should we expect a severe recovery, a severe decline? Is it going to be bumpy? Is it going to be rough? So go take a look in your email there. I've just happened to be writing over the weekend, thought I'd throw that in there for you. I hope that helps. That's the kind of stuff we do here. I'm always trying to give stats and actual advice, like stuff that's based on facts, rather than having customers go, I'm scared, I think the market's weak, blah, 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 and having me give the typical advisor answer. I want to give you stats. I want you to know the real possibilities, and the real possibilities are a little bit bleak in the short term, but I at least want you to know what the statistics say versus just sort of, going through, you should keep investing and do the typical advisor thing. I don't like that. Okay, anyways, if you like kind of what we're doing here, I did a behind the scenes video real briefly just a little while ago to kind of show you how we're just trying to be different. We're trying to be different financial advisors, have fun with the game. I love what I do. I want to try to show that with you guys. So maybe I'll do more of that stuff just because I like doing it. And some of you will think it's immature and, not professional, but I don't know. I kind of like doing it. So let's go over to the stock market here. Enough jibber jabber. This is the Dow. Is the audio doing something funny, by the way? Does it sound a little high? I'm going to back it down just a little bit. It sounds like it's like peaking or something. I'm not a pro at that stuff. But anyways, here's the Dow on the screen. You've got a downtrend. The blue line, we've just tried to make it really simple to show you this downtrend here. It's okay that the market's in a downtrend. What's not okay is how volatile it's moving in this downtrend. What I want you to know in the short term here, it is finding itself extended. I think the best case scenario would be if the stock market start the day lower tomorrow and just sell off real hard to get started. I think that really sets us up for a little bit of a bounce in the short term, and I'm going to be in the bounce camp. I think the markets are going to start to bounce in this general area. Unfortunately, it's going to be a difficult road to recover. Here's the S&P 500. You got 2650. If you're marking numbers here, at least for the futures market, that's where you want to look. If the markets somehow make their way back to that here in the short term, that'd be a heck of a rally. But that's where all that selling took place. Go back early last week. We talked about how you had, good starts to the day and then selling off. Good start to the day and selling off. And I went on and on about how that's a weak sign. That's not good. And that's okay. But now we're going to turn the tables and say, as we start to recover, that's a spot where we know there's a lot of sellers and potentially could be even more sellers there. So that's the S&P 500. All the way back down to February lows, by the way. October, depending on which contracts you're looking at or what ETF you might use. All the way back down here. So if you started investing anywhere in that time period, you've just retraced everything that you made. If you have invested any point after February, you are underwater, and it's okay. It's not you, I promise. Unless you're just buying and selling random crap, it's not you. I sort of was joking earlier to say, what, did everybody see the Dow show today and then decide to go do their tax loss harvesting? Because on the Dow show today, we talked about capital gains, capital losses a little bit. How you need to do that by the end of the year. Just understand that that's a lot of this in here as well. You have a lot of people that have nice profits and are looking at the opportunity of locking in some of the losses against those profits to free up money for better positions in the new year. If there are better positions in the new year, we'll see. So that's the stock market. Let's move on through this here. You got healthcare back down at the 200-day moving average. That's going to make a lot of headlines lately because there was a judge in Texas that said that Obamacare was unconstitutional. It's like, here we go again. It's like as Americans, we fight about the same thing over and over again. I'm not a fan, but if something becomes the law, can we just move on to other ways to better the country? And it just kills me. But nonetheless, because of those comments, because of what happened, and now the case possibly making its way back to the Supreme Court, you have 2% down day in healthcare stocks, Humana, Aetna. I think I listed a few of them in the description below. United Health, HCA, all of those down on the day. Healthcare itself just getting more volatile, and that's a shame. That was one of the better performing sectors of the market. So that's that one. If we look at the banking sector, they tried to rally this market. They really, really tried to rally this market. I'm going to go back here. If we can switch back to the other screen. Now that other screen probably won't come back now, watch. So anyways, if you look over here, you can see, I even tweeted about it. I said, look, they're coming after tech, they're coming after banks, they're coming after semis. There was a little attempt at a rally, and it was pretty good. It started almost right away this morning, and it took us all the way back to even. At one point, the market wasn't up or down anything, and then it just lost interest. It's not that there was selling pressure. The buying just sort of stopped, and the market floated around for a while and then tipped over. So a real attempt at people trying to pick the bottom today, unsuccessfully, but know that that's there. Know that you can feel that where there's people going, okay, I freed up some cash earlier, now I want to buy it at a little short-term discount. So the banks were a little bit, there we go. The banks were a little bit higher to start the day. I even marked that as thinking, okay, that's an that's a technical reversal. If that holds there, that's something people like to see. It did not hold, so we'll have to wait another day to see what happens. So that's the banking stocks. Semiconductors, you don't like to see that they're stuck down here near the lows. Not a good sign, in my opinion, but you know, we'll be here. We'll see what happens. Stock-specific news, you got Best Buy. Hyper extended here in the short term. This is the beginning looks of that waterfall drop that we talk about with our customers. When you're looking at stocks, you don't try to buy a downtrend. You don't try to guess when something's going to reverse and turn course unless it falls like a waterfall, right? Or like you throw something off a building and it just, you know, very steeply falls away. That's sort of happening here with Best Buy here today. Bank of America downgraded the stock. They basically are just saying their growth trend is slowing down. They're going to just see more weaknesses. So we'll see. Big deal will be here through Christmas. What are they doing through Christmas? How well are they doing? I mentioned the healthcare stocks already. If you're looking at those, you got HCA down 2% today. Humana actually closed up 1% today. That was one of the greens on my screen there somewhere. Yeah, Humana. Let me see if there was something else there for you. I want to see. Was it Humana and no, that's it. That was the only one. So there's the only one in the healthcare space that finished green, but a lot of those guys were seeing some weakness today. Moving on to retail, Lululemon actually finished flat on the day. Shares were upgraded by Stifel Nicholas. They think that they're going to see double-digit revenue growth next year, and so that's a pretty positive thing. Look, if a stock finishes flat with no real gain or no loss on the day, on a day like today, there's a hint at some relative strength right there. That's pretty interesting to spot that. Boeing, they announced they're going to raise their dividend a little bit. They also announced their deal to buy 80% of Embraer. Anyways, you want to look up the stock. It's ERJ. That stock was higher on the day as well. Remember, that's a Brazilian-owned aircraft manufacturer. So in order for them to do anything, Boeing actually needs permission from Brazil, the Brazilian government. And so by sort of tweaking their deal to $4.2 billion to buy 80% in the company, it's likely that the Brazilian government's going to approve that. And I think it gives them like a $4.2 billion valuation, which is certainly a lot higher than it was. But hey, what's a billion here or there, right? Did I mention they raised their dividend? They actually just announced that they raised their dividend, so that's Boeing. Twitter, that's been one that's been relatively strong lately. So here's an example of a stock that was showing relative strength, looking really good. The markets have a bad day, and so the stock sells off. Do you buy that? Do you look at Twitter and go, hey, that's otherwise been a pretty strong stock, bucking the market's trends here? I'll leave that question to you. I just thought I'd point it out. It's called a relative strength pullback. A stock that's otherwise normally strong just has a couple bad days. Do you buy that? Same with healthcare. I want to point out utilities real quick. Sorry to jump around. Usually I try to organize this a little better. Utilities also pulling back, and REITs pulling back. It doesn't matter how you want to look at it. REITs pulling back as well. Pretty rough day for those overall. Look, you got the Federal Reserve, you got the interest rates. People don't know what they want to do, and the media does a great job of saying, will they, won't they, will they, won't they? 70% chance, I think it's 74% chance they're going to raise rates. That's at least what investors are betting on. If they would just focus on that, most people would go, oh, those are my odds? Okay, fine. I have to play that side of the odds then, because that's where it's at. You certainly, you don't do something. If you have a 74% chance of success, you certainly don't go the other way thinking, well, maybe this is the one time it goes that way. No, it's just so you know what everybody else is doing out there. UNH falling today, 2.6%. That's really, I mean, that probably doesn't make much of a difference to you guys at this point, but if you look in the Dow, that's about 52, 55 points out of the Dow right there. So UNH falling today alone took a bite of about 50 points out of the Dow. Let's just call it 55. So that's basically it there. Looking around, you got GE up a tick today, just a small little gain there for them. Try to point out anything good for you. I looked around, just trying to find something interesting. Allstate was positive by 1%. Hartford Insurance Group, so in that property insurance category, because you got Hartford in there. So in that sort of space, you had a little bit of green. Boy, I wish I could look somewhere else. In the tech space, you got LRCX, not really a gain there. There's Stanley, where was it? Black & Decker? Forget if they were up higher today. Yeah, there's just not much there. Yeah, Stanley Black & Decker, 1.3%. In the oil space, some of the equipment companies were a little higher today. If you like Baker Hughes, Halliburton, things like that, but really nothing to get excited about. Oil, by the way, what was that, down 3%? Almost 4%, looking very weak. It poked to a new low there after the sort of pit close on the day. So really weak there with oil, and a lot of oil type things pushing lower. Gold about 0.5%. It's just been stuck around this 1250 number, not really getting anything done there, which is surprising. That should tell you something. The markets are getting weaker and weaker and weaker, and everybody's going, I know, I'll go to gold. There's no real return there, right? That's, you know, you're playing the game of hope at that point. Although in the little short term there, you got a tiny little uptrend, just not anything to write home about. Not anything to write home about. Ricardo's pumping. He's averaging down. All right, cool. Hey, think about it. No, really, just like let me take the advisor hat off for a second, right? So cross this off. Don't worry about anything that I have to do as far as company-wise or sales pitch, whatever. Really think about it. If you know the markets are weak, and really, you know, like I said, if you're one of our customers, go see the newsletter there, but basically expected to stay weak. Do you walk away from the market now and just say, I'll come back when things calm down? Like, you know, you'll contribute more, do whatever, invest when you leave everything for now and invest more when things calm down. Or do you sort of want to do more work now? Like my mind goes crazy thinking about, what can I buy? Where can I buy? Where's the discount, right? And so a lot of that stems from going through 2008, 2009. Now that was a disaster, by the way. That wasn't just a pullback, that was a disaster. But you see that, and now so many years later you go, God, if I had just had more money, could you imagine all the stuff I could have bought? And that will happen to you guys that are brand new. So many years will pass, the markets will recover, and there'll be another president, there'll be another set of drama that we have to go through, but companies will start growing and everything will be great. And you'll go, oh my gosh, I wish I would have went in and bought that, you know, and you'll have that conversation. And going forward, every single time the markets pull back, you will now get excited. But a lot of you have to go through that. You've got to go through this pullback. And it's sort of why I jokingly made the towel for our customers to go, I get it, you know, it's scary. There are going to be a lot of times like this. Let's try to, you know that we're serious about it, but let's sort of have fun with it and give you some stats on the towel so you know, okay, look, we're going to be just fine. In the meantime, you're not going to like me very much because I'm going to pull you through this. Every one of our customers, you're not going to like my response when you go, should I run away? Should I stop for now and invest more later? My job is to pull you along so that when we get to the other side, you go, thanks for doing that, because my parents, they took out their money, they cashed out and they're regretting it, or my uncle or my brother did this, and because you pulled me through, thank you. I needed that because I was really worried, I doubted you, blah, blah, blah. It's going to happen. I know it, I expect it, and I'm there for you. In the meantime, for all the rest of you, I'll just keep doing these shows. I'll keep showing you. I'll be honest, when it's not good like now, it's not good. And we'll have the help of financial investor there. Always some good advice. I appreciate it. What if the Fed doesn't raise rate with that show? I think if the Fed doesn't raise rates, that is going to be negative, to be honest. I think the markets would sell off. I can't say by how much. I mean, obviously no one knows, but I think people would view that as a negative, and there'd be a lot of question about, are these guys doing the right thing, or are they doing what they are pressured to do, or, you know, in the short term? It sort of makes them, you know how they say the Fed, we don't watch the markets, we don't care, we care about the economy. It sort of then makes them go, oh crap, they look at the markets. And if they're looking at the markets, then who's really in control here? So it's, in my opinion, they have to raise rates. Now, they get the best of both worlds. They get to raise rates and go, we're just going to do a little uptick here, quarter point, don't anybody worry about it. Most of you expected it anyways. And then they're going to say, but you know what? We think we're good from here. We're going to hold off for a little bit, but we understand the challenges in the market, all those Ivy League school words they're going to use, and then I'll dumb it down here for the show. But they're going to use those words to say, we're basically done. We're cool. We're going to sit back and Merry Christmas, everybody. And then that'll help the markets understand that they got to still do what they wanted to do, but now they're throwing everybody a bone. They've already started doing that. They've been really good at telling people ahead of time what they're going to do. DCI, Cameron, you know, I love it, man. I love it. I love when someone comes along and you know, it's former drum majors of different drum corps and stuff. I love it. I could talk about that all day. Fed doesn't rate, yeah. Yep. What sites to use for stock stats and information? Actually, write in the folio account. There's everybody has access to it in their folio account. There's a lot of information in there. I have alerts set for everything. So in the middle of the night, if you see me tweet about China or something, I'm very much interested in all of that. You can use really anything. I mean, there's lots of data aggregators. You could use Google to set alerts for different data. And it's up to you. We're actually building, if you look at the behind the scenes video, over here, you can't see, it's sort of funny because it looks great, right? But over here, the mess you can't see, we're going to build our own data center, right? So you're actually all the data that we pull will be only pertaining to what we talk about and, the interesting stuff, not all the randomness. So we're actually building out on the screen. It will be Jazz's, new highs, or we're putting a list together of what it's going to be. So that'll be cool. Little by little. There's a lot of great sites out there. Thanks, Manu. Only sane show left. Well, we'll try to keep sane. In the meantime, if we helped you in some way, hit the subscribe button. I really appreciate it. We are going to get back to work here. Lots to do. And just remember, this is going to happen. I know it's easy for me to sound calm. I'm going through the same thing as you guys, but you learn to see it as a discount, and you eventually get really excited trying to find, like the question becomes, well, what should I buy? If everything's discounted, where should I start putting my money? That's the answer. Not from fear, but from a point of opportunity. So we'll get you there. Don't worry about it. In the meantime, have a great rest of your day or evening, wherever you're at, and we'll see you again tomorrow.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.